Good evening, everyone. Welcome to Curb to Kitchen. We've just started this, just looking into property, how the economy is going in Australia. It's always good to have a few different forms of information. Hopefully, I can provide a bit of an insight to how the future is looking, or just how the current situation is looking in Australia. I have been kind of keeping up to date with the southeast Queensland property market probably for the best part of 3 years now. I personally don't own a home at the moment, looking to get into the market kind of this time next year, just with how our household is. I just want to kind of show a bit of information that I've collected along the last few years, how the summer might be, and just kind of where the average household in Australia is sitting at the moment. So what you can see on our spreadsheet is, so these are basically properties that have been bought since COVID happened. So since cash rate was basically at 0.1%. So money was quite affordable. We did get a stimulus kick in 2020 as well as 2021, JobKeeper and a few other things just to help the small businesses out, help the economy flowing. Spreadsheet here with properties that have been bought since COVID and are back on the market. There will be a few properties here that have sold twice. So they've been bought, say, in May 2021, they've been sold mid 2022. Person that did buy it is selling it again. So there are some trifectas here. Some of them have lost money. This is just kind of just to see how Gold Coast is going. Hopefully we'll do a Brisbane spreadsheet of this. Anyways, we'll get stuck into it, just show you how the spreadsheet runs. So you got your address column on the far left-hand side, purchase date. So this is the initial purchase date, or even the purchase date of someone trying to sell their home again that they have bought since COVID. You'll have a few purple sections here. These will kind of go into the property of the week. Some of these highlighted are those trifectas kind of being sold 3 times in the kind of 3-year span. And you'll just see the capital growth that they have basically made for the exact same property. And not much has changed about it. Buy price, so this is a person's that's selling, it's their initial buy price, then their asking price. Most of the things on realestate.com at the moment are just contact agent. You will get these nice price guides, and this is kind of just seeing where the market is currently. I've seen in the last few weeks that somewhat shifting towards the buyer have been sold slightly a bit below their asking price. So you will see a couple here. The asking price for this was $950, and they did sell it for 60 grand less. Same here. It's only kind of a 30 grand swing, 50 grand swing in between those, and about a 75 grand swing. Only one of them didn't really make profit, but we'll get onto that a bit later. But asking price, date listed. I try and look at this every day and keep this up to date every day, and this will be basically days on the market. Then you will have suburbs, then you will have land size. This going from big blocks like you do have in Tamborine to kind of townhouses. Bed, bath and car, so you got a 4-bed, 5-bath, probably a powder room or something in there, and a 4-car. And this will be basically a kind of sold listing. So for this one in Sanctuary Cove, this kind of just brings up, basically was bought in January 2021. So we'll look at the sold column. So I've got about, I think it's over 700 properties in here now, been bought at least once since COVID, and now are back on the market and have been sold. Some of them have been basically sold twice. Then you've got a couple that have been sold 3 times. So yes, a lot of people have made an extraordinarily great deal of money. Best one only got recently sold last month. This was a reno, so I think it was a complete, so absolutely lovely job with what this person has done. They bought it in June 2022, so quite a soft period of the market. Not much people had money to actually buy then until kind of spring this year. So there was quite a lot of people that bought around September all the way through to January 2022. Not much of a home initially when they bought it, and this is what they've done to it. So very well done to this investor. Absolute lovely home now, and they deserved every bit of it. They held it for, June 2021 till basically August 2020, a bit over 3 years, and they made a profit of 4.7 million, we'll say. 283% growth. Yes, you got building supplies and everything calculated into that. You will see a lot of these places bought kind of late 2020 or early to mid 2021. They will have a lot of capital growth to them because they bought it when it was quite affordable. Hadn't seen too much FOMO of the market. Cash rate was still very low. So people had secure jobs, or even if they were looking at buying in, say, 2019, had a good deposit put aside. Basically, when the cash rate hit 0.1%, looking around, able to go into the market. Some people that might have been selling here may have lost a job, needed to sell because they were unable to afford their mortgage. A lot of that kind of mid to early 2021, you'll see very few people that would have lost any money after taking in like moving costs and real estate commission into account. Very green. Anything over 10%, you will find basically quite at least profitable. Now, people have lost an awful lot amount of money as well, so there's not as much that have lost as has gained. But I kind of say anyone beneath about 8% is basically losing money after you take in moving costs, commissions, XYZ. The biggest percentage loser, this was quite early on. This was in, it was April last year. So quite a quick handover, 2 days. They wanted to get out of it and they lost 21%, 22%. Bought it for 1.6, sold it for 1.25. Quite a few people have overbought. And as I was saying before, the later you get into this, the more at risk. So people that were kind of pushing that market higher and higher, everyone was overbidding each other, trying to make the biggest bid that they could just to secure their home when the cash rate was quite low. So all these cash rates, you're beneath like 1%. So your borrowing capacity was very high, and that savings ratio for household was still quite high. So everyone had a lot of household liquidity, overbid for a property, and basically they may have had a result of not being able to afford their mortgage, so they needed to sell, causing them as a capital loss. Quite a few people underneath kind of that 5%, so anywhere underneath 10% you kind of make even. Between 5, but yeah, you're not really making any money, even if stamp duty is included in this. I do see more of these sales coming up. Middle class homeowner wanting to get into the market just is unable to afford the current mortgage repayments that these homes are offering. So we did have our last increase basically in November 2023. Don't have too many places that have sold kind of in 20 or been re-put onto the market in 2023 and have sold. There are a few that are currently on market in that time period. So you kind of got that from January. So there's about 70 odd, I'd say, about 70 odd from basically in the last 18 months that have been bought and are back on the market. These ones here, so I think there's not a whole lot of liquidity in the households now. So you have household savings ratio. So basically in the last year nearly, the household savings ratio was at 0.1 in September 2023, and it's kind of hovered around 0.6. So for every $1,000 that a household brings into Australia, they're currently saving $6. They were saving $1 of it in 2023 September, $14 of it in December last year, and it's been kind of flat for the last two quarters at $6 for every $1,000 that a household earns. So your average was about that $50, so kind of $50 to $60 back in pre-COVID. Not even anywhere close to that. We're kind of at the 10%. People are saving 10% of what they did pre-COVID, which is shocking. So a lot of this is getting eaten up with cost of goods, groceries, mortgage. So people that basically did buy a home around here. So that, as I was saying before, with that September 2021 all the way through to that kind of May 2022, a lot of people had very good cash flow in their home. They weren't traveling anywhere because they couldn't. They were getting all these stimulus checks from the government. Fuel was cheap. Inflation hadn't really hit yet. So a lot of the cost of goods was very cheap. Fuel was cheap. Rent was, if they were renting, was quite cheap at that time. Everyone's cash sheet or balance sheet for their household was brilliant. So they were saving about $200 for every $1,000 the household earned, about $100 to $200. And now those same households, if they are tied up into a mortgage they can't afford because the cash rate has gone up 4.5%, 4.35%, the banks have passed that interest rate on to their customers. I do feel like we're going to see a slight slowdown just for the kind of lower to middle class. If people are entering the market, they probably are going to find it very difficult to afford their mortgage. Go back to this spreadsheet for a bit. So there's currently Not as many homes on the market compared to this time last year. We'll start looking at keeping stats again. I was doing it a bit last year, so this is August 2023. 52 properties added to the market to this spreadsheet. 13 had sold that were on the list. 7 were taken off market. Addition of 32 new properties were added to the market that week. Your current stock level for then anything that was 3-bedroom. Average days listed on the market. I'll keep tracking this every week. I hope to do a kind of a weekly update of how everything is going for Gold Coast as well as Brisbane. Hopefully I have a kind of separate video. I'll touch on a few things kind of with gross domestic product, unemployment rate, as well as building approvals. Once I start doing this statistics again for next week, it'll just give us a bit more insight. There has been an awful lot of properties added to the market compared to this time last year. So we're currently sitting around 3,334 compared to what it was kind of September last year. So we're about 10% up, say. So we've got 10% more supply on the market, which is good. Do still have quite a sizable sell-through rate. You kind of want about a 4 to 6 month supply, about 3,300 homes divided by 760, say. So yeah, we are kind of ticking a bit higher. Anyways, we might leave it there for this video. Hope to bring you more insight for the few more videos I do on this. Thoroughly enjoy keeping up to date with it, and hopefully can find ourselves a nice place to call home that's affordable and doesn't break the paycheck. Anyways, pay off your consumer debt, support your local butcher, baker, and the fruit and veg maker. See you in another video. Bye.